Markit's global PMI business surveys showed the rate of worldwide economic growth slowing in November. The rate of growth is down to a 7-month low. Our chart here, tracking the PMI against GDP, shows we've moved down from around 3% year-on-year growth mid-year down to around 2% in November. So quite a marked downturn. Right-hand side breaks that PMI index down a bit, and you can see here the US and UK are very much leading growth, and the rest of the world is largely stagnating around the 50 line. Now, why is it stagnating? Let's drill down a bit further. You can see here on the next slide, the left-hand side, you've got the Eurozone. The PMI there was down to a 16-month low. The single currency area is more or less stagnating in the fourth quarter. Japan is also struggling. The sales tax hike in April really took the steam out of the economy. The GDP data have signalled a recession in the second and third quarters. The PMI data is signalling a bit of an upturn, but it's still very modest growth indeed. Emerging markets are also full of weakness at the moment. Our China PMI is down to 51. It's signalling very modest growth in the fourth quarter, suggesting that Chinese authorities will miss their growth target for the year. Then if you turn to Russia and Brazil, the PMIs there are down to their lowest levels since 2009. So 5-year lows really across the emerging markets. Now let's quickly go back to the US and UK. These are the bright lights of the global economy at the moment, suggesting that we should see some further strong growth in the fourth quarter. That's certainly what financial markets are pricing in at the moment. But let's look, both of these countries have moved down a gear as we move through the fourth quarter. Growth isn't quite what it was before. That's something that's not been priced into the markets yet, especially if it continues to weaken. All of this research and a lot more detail is available on the commentary site of Markit.com.